everybody, and welcome to another episode of the ITEL Insights podcast. My name is Zane Itel, and I am the founder and lead analyst for ITEL Insights. Today, we're going to be going over the Greater Vancouver Condo market. And again, apologies for not being able to get you the May update, but we'll try to make up for it here with a fantastic podcast today. Before we get into all the data and the content, of course, if you do like our podcast today, we ask that you give us a thumbs up, subscribe to the channel, and of course, feel free to share this with your social media friends and family as well. That being said, let's dive right into it. We'll put the condo price chart up on your screen here now. And basically what you're seeing is the market prices are down 10% from the old market highs in January of 2018, when the average sale price was $750,000. In June, it finished 1% higher than May at $679,000. So what's interesting about that is, there was a lot of scuttlebutt that June was going to be the month. People were just couldn't wait to get out of their houses and go and buy a condo. Well, that apparently didn't show up to be the case, and we'll get into the sales numbers and the inventory numbers, which are even more interesting as we progress here. But let's just strictly deal with the price chart. We've been getting some feedback that listen, there's one offer with 16, or one property with 16 offers or 12 offers on it the other day. How do you miss that? We don't miss it. We include it. All of those multiple offers are incorporated into the overall data price. What you might be doing as an individual agent is working for your one individual property. What we're doing here is analyzing the market. That one individual sale that you're so happy about, we're glad for you, but that does get incorporated into the data. And the data did only move up 1%. And we'll get into, as we said, the inventory, which is rising rapidly, and the sales, which are remaining nominal or dormant, even worse. So again, average sale prices are down 10% currently. As we go forward, what are you going to expect in this market? People are, again, touting the victory that coronavirus is over, and real estate market should start to flourish again. In my opinion, that's just unabashedly incorrect. First of all, we're not out of the coronavirus, and just because we left the houses and everybody was anticipating these high sales, high prices, that didn't occur. And we're not even done with the rollout. Like, we're not even done. We're not even close to it. We're still seeing mortgage deferrals being a prevalent thing. And also, if you're a landlord, you can't even ask a tenant to leave that's not paying the piper. So as it sits right now, we're definitely not even feeling the full effects of this coronavirus or COVID-19, however you want to phrase it. Companies are just starting to go back to work. Restaurants are just opening up, and they say, the employment rate's up. Correct, but it's not nearly to what it was, and what it was before businesses were still struggling to get by in some cases. You can't expect a new positive to come to it. So the overall market is going to hit a depressed mentality, and that will definitely trickle into the real estate market. As your businesses get tighter, maybe the income's a little bit closer to the bone, you might look at selling a few investment properties. The hitch is, if you got a tenant in there that's not paying and you can't even evict them, oh my goodness gracious, right? So there's some challenging times for landlords right now, and that will continue to be prevalent until the landlord gets control of his property back, and that still remains to be seen when that will occur. So that's one factor, and of course you're going to have the explosion of inventory, right? On its own volition, before coronavirus, everybody was leery, or at least aware of the pre-sales that occurred in 2016, 2017. Those completions were largely set for 2021, some in 2022. That's still upcoming. Nothing has changed, except we're in a worse current position. So we are going to see inventory rise. And what do you see when inventory rises? You see competition amongst sellers. And then if the competition or the need to sell is great enough, then you just start lowering your prices. That's eventually what will occur. It's almost laughable or pie in the sky talk to say that this market's ready to roll again. It just simply can't. The world is concerned about another shutdown, yet local realtors are so bullish on Greater Vancouver condo prices and detached prices. It's very interesting. Now, of course, everybody has their job to do. If you're a realtor, you're trying to get your job done. The realtors that work with ITEL Insights and choose to accept our knowledge rather than combat it have done very well, folks. They've been advising sellers to sell at an appropriate time, advising somebody to take an advantage of a low market price because we know where the actual market cycle is. So our realtors doing fantastic. The other market realtors that says, but they just continually get proven wrong. One other oddity, we know that there's, of course, other analysts out there that have opinions. And one thing that's interesting, right? I got no challenge, no qualms with a man trying to, or a person trying to forecast the market. As long as they're trying, they're attempting to be correct. I mean, we've said people have flip-flopped. Well, we held firm and we've been correct, and that's great for us. But we're going to show a little bit of appreciation for the others that are at least trying. But then there's those that are strictly market activists. In the face of all of this, in the face of the market, detached market coming down 20% and the condo market being down 15% this time last year, they were saying it's positive. So they've been unabashedly wrong. They're not analysts. They're activists. They're saying buy now, buy yesterday, buy the 6 months before. Never once saying, hey, there might be a lower entry price, a cheaper property sale that could occur in the upcoming months or years. Now, of course, it's debatable what's going to happen over the next 2 months, 2 weeks, but longer term, our trends have been absolute. We told you that there will be a buying tick up once prices reach a certain point. We saw that last year. Everybody called it the bottom. We're saying no. That's just the train, the light at the end of the tunnel that you thought it was, is the train coming to hit you. So now subsequently, prices rose back up 5% from the year over price. And that's not a win. Again, it's a lower high than our previous high, and we're going to continue into a downtrend as we go forward with this increased inventory coming. So you can but to death about your 12 offers or your 2 offers or a heated open house. That's one property that makes up the market. The market overall is definitely still heading lower. Now let's get into the inventory, which is, of course, the supply-demand factors. This is the supply. I'll toss this up on your chart here before we get too far. And as you can see, what's interesting, it's breaking downtrends. This downtrend had been prevalent since 2012. Now, of course, it accelerated and really fell out of bed in 2015 when that frenzied market mentality began to pick up, and then it bottomed in 2018 with just around 2,000 active condos. Currently, we're back above 5,000 for the first time since 2019, where we see that test of a blip above that downtrend. It quickly retreated and said, nope, not comfortable, out of this downtrend. We've lived in this downtrend for the past 7 years, 8 years. We're comfortable here. And now it's going, you know what? It's done. We're over this downtrend. We're going to create a new uptrend, which is probably instigated by the long-term black line you'll see at the bottom of the chart there. That'll hold as this 12-year market had held. So this will be the next test during an overheated market that has to be dealt with probably in the next 5-6 years or so. But as we sit right now, inventory is on the rise, again, above 5,000. And the new monthly listings was the highest since May of 2012. So when everybody was talking about perceived pent-up demand, that was like a whisper in the wind. Nobody heard it. What was actually pent up and what will continue to be pent up is a need to sell. Okay, so we saw 2,800 active brand new monthly listings in the month of June. That's up 1,000 from the month of May. Now, that's to be expected. Again, people were housebound. But to say that the demand outweighs the need to sell, again, is incorrect. It's a fallacy. The inventory rose 1,000 from the previous month. The sales only rose 450. Now, again, it's a rise, but it's not compared to the increased inventory that will continue to permeate through this market. Again, on its own new economical volition, based on renters not necessarily paying, property values going down, and a tougher economic climate, that you might need some extra capital that the renter's not paying for it, so you put it on the market. Well, how many of those are going to hit the market? And then you throw on the beast onto itself, which is that pre-sale market. Now, some of them will be for resale, as the investors did purchase, but some of them are still owned by the developer. Not a ton that were available back in 2016 because it was so frenzied. But what you're seeing on the front lines, the realtors, there's a lot of assignment sales trying to occur again. There's 3% commissions right across the board offered to buyer's agents. Usually that would be the entire commission, if depending on the structure that you do set up with your individual realtor. But they're offering higher commissions. Does that sound like a developer that's confident? Not to me. That sounds like a developer saying, I have to try to entice a realtor to entice their client. Now, one question that that was asked on one of the last podcasts: are you a realtor? Well, yes, I am a realtor, and I've been a realtor for 12 years. Do I advertise that? No, not necessarily. I am very, very busy with this analytical empire that we are creating and our clients that do exist. We have been working with Michael Campbell's Money Talks here rather closely over the past couple of months, putting out some new products. They're going to be releasing the promos here in this upcoming week. And of course, we did update our website as well, so feel free to check that out, see some of the different report structures that we do offer. One thing that I will mention, there has been so much demand for our work that unfortunately, I had to increase the price, folks. I'm sorry about that. That being said, I have still continued the discount. Okay, so our individual single reports are what were $250 have increased to $500. Until August 31st, I'm going to offer everybody the discount. It's 50% off on the website. They're still remaining at $250. So if you've been thinking about buying, you can pull the trigger. Again, they are forecasts. It'll give you the whole identified market cycle of when prices will bottom, what the trends look like, and what those price points will be, and what the inventory will actually look like in the future that will force prices down to a certain point in the market cycle. So that's available. Of course, we do have the monthly reports available for $1,500. If you enter in a promo code, and the promo code is simply ITEL Insights, one word, no spaces, you will receive 25% off the monthly reports for the individual areas, and of course for the overall market as well. So we're offering some discounts here until August 31st, and then we go back to full tilt payment, folks. So I just wanted to make everybody aware that, again, the promo code is ITEL Insights, one word. And the single reports are on sale right now for $250. They will eventually be going up to $500 after August. So I say that to kind of illustrate that, yes, I mean, individual markets do move individually, right? West Vancouver doesn't exactly move as Pitt Meadows, but they both make up Greater Vancouver. Now, in the condo market, as our followers know, it does lag the detached market. So I'm not trying to hype you or churn you in here to buying a report. They are great information. Our clients do appreciate us, absolutely, undoubtedly. But, no pressure. The condo market probably will bottom likely in 2022. Now, the overall correction will be 30%. So what prices were at $750,000 in January 2018, likely in 2022, we're going to see a forecasted price of $525 exemplify itself. So as inventory rises, and probably rises fairly rapidly as we enter into 2021 with all this release of condos, plus the actual rollout of the effects of what this coronavirus has been, not to mention what it possibly could be if there's a second or a third wave, depending on which allegiances you lie to there. So, the market's above 5,000 for the inventory and sales. Let's get into the sales here. They remain dormant. We'll just toss this up on your chart. They're very much in that downtrend, wide swathing range, literally exactly in the middle of the closer channel. And again, very much in the middle of the dormant sales channel identified by the black horizontal lines. Now, probably even going forward, we're going to move that top line lower as you see an increased awareness or skepticism about current prices. What's interesting to me, and I find it very interesting, when we started this thing 2017, 2018, everybody kind of laughed about it and said, there's no way you can predict prices with technical analysis. Well, okay, we've proven that wrong. And then there was still a debate. Is it going up? Is it going down? When the data's clearly going down. Now that we've already tested a 15%, and there's undeniable a case to be made that the market will be going lower. You're finding, the realtors, the analysts debating that again, saying, well, it's bad, but it's not that bad. Where 2 years ago, they were saying it's just straight good. So again, they kind of seem to be lagging what the forecast should be. They're merely saying what the market was a year ago and bragging about it now. But last year, they were saying it was a positive term. It can't be both. It literally cannot be both. So again, stick with ITEL Insights for our analytical interpretation so you can have actionable intelligence. The sales will likely remain in this channel. The sales for June were 1,017, which were higher than the May sales of 556, 451 increase to the sales. But again, the month-over-month inventory increased 1,000. So that's dominant over this perceived demand to purchase. And think about this. If there was a demand to purchase, you would see investors. There's nary an investor anywhere in the condo market looking to purchase. You might have some owner-occupied people looking to purchase. Fine, fair enough. That's called demand. That's called there's always going to be a buyer and a seller inside the market. During bad times, the old rule of thumb is 30% people will still need to buy and sell. So the fact that a realtor say, well, I sold the property, that's awesome. Again, you're part of the data, but the overall data is still very negative. There's not enough boastful sales in there to create any positivity, except for your seller, and that's awesome. But to achieve a sale, it has to be at a lower entry price as the competition continues to increase. That's all we're saying. The competition will continue to increase. The sellers will have to realize lower prices just to get a look from the buyers. Not to mention, as we continue to go forward, that process or that thought process of, hey, listen, there's an investment or prices are cheap, even as the owner occupied, they will begin to be fearful of overpaying for a depreciating asset. Whereas right now they're saying, okay, undeniably, ITEL Insights was right. Prices are no longer increasing in 2017, so they've fallen. And maybe now this is good enough. No, it's not. That's what some other analyst might be saying. What ITEL Insights is saying, we've been correct before. We've been correct all the way along. The likelihood of us being incorrect this time is minimal. There is a chance, of course, this is a high-level interpretation game, but we've been hitting it out of the park. I mean, absolutely out of the park all the way along. And this will continue going forward. As the inventory rises, the sales remain dormant. What do you expect to happen? That's a supply-demand factor. So if you're listening to analysts that are truly activists, basically kind of like the board, where the board said sales were up 65% month over month, but conveniently left out that they're comparing the month over month to the worst month in the sales history, it's kind of untrue, let's say, right? So when you're continually like that in the face of actual downtrends in sale prices, actual uptrends in inventory and dormant sales, you're not an analyst anymore. You've turned into an activist. You've just been unabashedly wrong about markets going lower over the previous years, and likely you will continue to be wrong about these upcoming years as the prices do continue to trend lower, and that's what the market will realize. Thanks very much for listening. We do appreciate the followers and the fans. Thank you again for sending in your emails of the testimonials. I haven't got them up on the website. It's kind of piece by piece, but I do appreciate that. Those that want to send them in, please continue to feel free to do so. It's at dane@itelinsights.com. If you did like this podcast, we do ask that you give us a thumbs up. It makes us feel good about creating this content. And please tell your friends and your family to subscribe to the channel. Talk soon.